Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. Yeah, it's been a long few days already. Recap and look ahead. Woohoo! Hump day. Here we are. Okay, little volatile week. Fed days now behind us too. Monday we came into a big downdraft and definitely had to switch some gears and reduce some risk because who knows, who knew how far down we were going to go. Got a little price discovery on Monday, Tuesday. Held the accelerated trend line, and then today, the indices didn't give us that much clarity. Let's do the indices first. Here, let's go with the S&P cash. Kind of did what we said it was going to do, though. For just a quick little recap, this was, there, and then here is the accelerated trend. So if you remember, when we came into today, I was long the spiders, I was long. What else was I long? I was long BABA, I was long some IBBs, for various good reasons. And I said, I'm like, maybe we, push into this gap, okay, and fill it, and then, and then it either does a higher, lower high, or you get pretty feeble. Here it doesn't look as extreme. Basically, again, we held the trend line, so that's intact, and I had, nothing really fell apart. Let's go real quickly to the spiders. The spiders looked actually the same too. Here you go. This was that, and then that is that, and at first you pushed a little bit above this early on. Okay, so I did get out of my spiders, which I did tell you guys in Redler All Access. I was long the spiders from the Red Dog reversal, took some overnight, sold it into this, and then we got a little chopped around with the lower end of the range here. I was trying to buy it back, and I just didn't trust it. Anyway, I do still have a little bit overnight. So tomorrow we'll see what happens. Okay, the reason why I feel like there were bullish undertones and they were just selling the indices, which I'm not sure why. But anyway, the Qs acted well. Okay, still the Qs, held here on the pullback, gave you a Red Dog reversal yesterday around that pivot, and then some follow through because of obviously Apple. Let's get into Apple. Apple, we talk about pivots, guys, for after hours trading. Okay. They're hard. You don't get those pivots the next day. But anyway, yesterday there was a little time to buy Apple above this 122.35. Wasn't a lot of time. You had to be quick and understand, what the street was looking for and if it was enough for it. So anyway, you look at the chart, and it does seem as if at some point it's going to get to, all-time highs. And on my Redler report that goes out in December, for those of you that own the stock because of it, my target's 144, which, way away, lots of distance away. We've had so many different nice little patterns here, to be involved before the binary event. The Red Dog reversal to start the year, the taking out of this little spot. I posted the chart on Twitter, so I'm not going to get into it. But here also, when the world was saying head and shoulders top, that's when the right shoulder broke. Remember that? Everyone's like, oh, look at Apple, the head and shoulders top. Left shoulder, head, right shoulder. Okay, maybe. And then it broke it right there. That got you away from that pattern. Anyway, look at it now. So what to do now? Okay, you could be long it versus the, this, what's it called? Today's low. We'll see how long it takes to absorb this gap. I did buy a little bit on, a few times today. There were two strategies that I wanted to do. One was here. Okay, this is where it opened. Okay, right there. And I did buy when it went through the what's it called? The 5-minute high. Okay, well, not the 5-minute high, but like that 30-minute high, and gave you a quick push. And then if you stayed with it, and some guys bought it here, versus that, you had a trend at the end of the day. And then on the close, obviously, not obviously, but they take you back to the VWAP. I actually bought some more on the close, thinking that okay, they had to bring it in. There's no buyback in the last 5 minutes. You can't buy it above the average cost. That's the law of the buyback. So I bought some here, just to stay involved. So I'm not feeling like I'm chasing it. It was $1.50 down. Okay, decent buy. So anyway, for Apple, good for the market when Apple's in play. Good for us when it's in play. It's very liquid. Lots of patterns get triggered on it. So now, be in it long versus 127, and we'll see at some point it'll take this out and get towards the old highs. So let's talk again about pivots. Facebook was going to come out with their earnings. Everyone's like, Red Dog, you taking options? I'm like, I'm not taking options in Facebook. Do the same thing. Okay, 133.50 is the all-time high. Why do traders buy all-time highs? If the report's good enough, it's because anyone who is betting against a good report, anyone who's been short Facebook for a month, 3 months, 6 months, they have a decision to make at that all-time high. Because in order to go to 137 or 139 or 140, it's got to get through 133.5 first. And in order to get there, it's got to get above it and stay above it. So anyway, Facebook, why do we come up with that pivot? Right here. I don't come up with a feasibility study to figure out what's the pivot, how do we do it. Okay, there it is. That's the all-time high. Getting above an all-time high and staying above it is not bearish. So anyway, yes, it had a big move to start 2017. The actual options guys are pricing in $6 or $6.50, so it could potentially, if the conference call doesn't have too many expenses on it, etc., maybe it sees 139 after hours. Let's see where it is right now. Facebook is a 136.45 up 322. It's just funny, the system and how do you do it. Like, it was hard to get. You could have got 135s and made some money. I sit there next with my desk partner. I'm like, we should just buy 133s right here. It's going to be good, and put some offers around at 136, 137, and just come back at 430 or come back at 415. Boom. By the time the report was out, by the time it traded through 135, it was there, and it was like, oh. But you know what? That's not my process. Because what would have happened if I bought it, it missed, and I come back, it's down $7, $8, $9, and you give back your entire month by trying to catch a free play by using your opinion that the report's going to be good. So anyway, you had to actually listen. It was 141, and then you had to buy it, and now we'll see if 136 hold to get the $6 option pricing at 139. But I wouldn't be going all in up there. Just if you're trading it after hours, make sure it holds 133.5. So there was another trade there. Google was a different story. Google wasn't enough. Google missed on revenues. Okay, no, they beat on revenues, missed on the print, and it tried. This was that pivot. It tried to get above it the next day. It was down, I remember, because I had a call spread. Thank goodness it went above 861. I remember selling the 840s, and then I had the call spread over the 870s. I bought it back. I actually did pretty well with that. Why? Because we bought the first part of the 840s in the base, and by the time earnings happened, it already went. So that's why we did a call spread, because it got financed. So if you buy options right and you have a pre-earnings move, you get to limit some of your risk. But anyway, that was the pivot. Pushed you, failed, and look at it. It got to the 50-day, exactly what we talked about in the note. That's why I haven't been active there. We were even saying this morning when it was up $4 or $5, you probably could short it. It's going to need some time. One of the names that I'm still in with options is Amazon. Amazon hasn't had its report yet, so the shorts are still a little scared. There's still people speculating that it's going to be stellar and also maybe a stock split. It's hanging out technically pretty well. I am in the 850s and 860s. If it's tradable tomorrow, meaning like all of a sudden it's up a few bucks and they announce a big earnings report, maybe a stock split, I will be buying it after hours through 843, 847. If it happens quick and you can't get it, you know what? I'll have options. I won't trade it, and then hopefully it's enough where you get paid for holding the options. Amazon hasn't done anything, for quite some time. Made its high here back in October. So there are some analysts bringing down estimates, etc. We had some nice trades here. This was a nice trade. This was a really nice trade. This was fair trade. So now, we'll see if it gets above this. We could trade it after hours, or do we have just the options that we can make money with? Or they're in line or not enough, and then the stock, gets beat up, and you know what? I lose my money in the options, and I give back a decent chunk, and I'll move on. But this has been like a thesis of mine, this Amazon, since the start of the year, waiting for it to wake up, and it did wake up, and we actually had some good option plays up until now, some good trades till then. So, I know I'll be upset if all of a sudden it does blow it out and it does do a stock split, and it's a 900, and since I'm risk averse and I don't take it, I'll be upset. So you know what? I'll risk my premium paid for that kind of move, especially if I can't trade it after hours, if it's too fast and too wide. If I'm wrong and they're in line and it's not enough or it misses, you know what? Back in the penalty box it goes, and we'll wait for it to reset up. As far as, again, the Fed was today, and they're a little bit more dovish than I would have thought. I would have thought they would have been a little bit more hawkish. Banks didn't really sell off, but they're not going to really like it. Goldman Sachs, not looking that great, to be honest. Why isn't it looking that great? Because broke below the 50-day, came back up, and it's pretty much below this new little trend line here. So as long as it stays below this, Goldman Sachs is going to not be a headwind, maybe, not be a tailwind, maybe it'll be a headwind. The way it'll be a headwind is if it breaks this 228. So we'll look at that tomorrow. JP Morgan also. Not as bad as Goldman. Why is it not as bad? Just because JP Morgan held the 50-day and it's still above it. So tomorrow we'll see if it stays above the 50-day. TLTs, what did it do today? Not a heck of a lot. Not still in this, still controlled here. I still think that at some point it makes new lows, but today without a dovish Fed, maybe it goes a little bit higher. I don't know. I'm avoiding that. And then there were some other high beta names trying to figure out what to do. I did lose a little money in Netflix today. For some reason, not for some reason. I thought that maybe it could break above this flag here, and I bought it higher and I got stopped out. For those of you who are trading adverse the 8-day, you're probably sitting in it and it's just fine. I just, whatever, didn't trade it well. If it gets above 142 with some volume at some other point, maybe you could buy it. Tesla Motors is now Tesla Inc. Not a greatest day trading, day today. It showed relative weakness. So if you traded actively, probably a day to reduce just in case, because if it were to break the 8-day, it can come to the 21-day, okay, which would be a good scenario, I think, to be buyable. But that would also cause a little bit of a trend change. Okay, we've been on top of this since it broke this descending trend line here, and it's been above the 8-day since. So as a technical trader that measures composure, speed, and momentum, if it happens to break the 8-day, that'll be the first time it does it in a while. So that means, maybe a little bit less momentum here for Tesla, a little bit more time to buy, and then we'll see how it reacts here. For the whole month, you had to be real quick, where we had a lot of nice buyable moves into the 8-day and then break above, into the 8-day, then break above, and obviously down there. So we'll now see. It still might hold it, but for today, if I was looking at holding some positions, for a day and a half move, this would not be it for now, just the way it looks. Or if I was in tier 2 here, or, tier 2, holding it the whole time, I would be in tier 1 just in case. When I talk about day and a half moves, I talk about like an igniting bar, with a good setup, and that for the first time, that was the IBB yesterday. Remember that? Redler All Access, I tweeted at you guys saying, look at this day 1 in IBB. You could have played it 2 different ways. Buy it at the red dog reversal here, add to it here, and then now you had a little follow through. I took this 2-day move. I probably should be sitting in it because I do think at some point it's going to take out this descending trend line, but maybe it gets there, holds, and then we can do it again. I was just happy to, find a nice day trade. These day and a half trades are the ones that pay the bills. On the VTF, we talked about AGN because it was a Tepper name. I looked at that second day. So again, just for, if you didn't catch this one, just for the future, look at this. Had a big move, consolidated down, wound up holding the 8 and 21-day, woke up with a nice day 1. It was down $1 for some time today, and then as soon as it got above yesterday's high, day 2. The best way to play this was be a buyer, on day 1, okay, and then let it digest, and then be a, get into tier 2 here, and then maybe sell back to tier 1 there instead of, buying today and then just selling it into there. But again, you have to adjust your share size and position size, and that's a problem I have with sometimes. Amgen also was on the note this morning, talked about the potential of this helping lead the biotechs up. Why was that? Because it was above all the moving averages, and here you go, nice little day. Next obstacle will be right here for Amgen. And then we also talked about Celgene to see if it can get a day 2, and did get a nice day 2. It didn't open up, but it held the top third, continued. So time to do more work with the bios. So I'll have the bios, if you come back to me, Freddie, more in the note. So every time a sector gets in play, I tend to put more of them in the note because there's more tradable moves. If you look at my note, I had a big new issue section 6-7 months ago when ACIA was running to 100 and change, Twilio was in play, you had TTD, you had EVBG, you had all those, and then all of a sudden once they topped out and started doing secondaries, there's less emphasis on them. So I try and keep the go-to list of 20-25 names because there's only so much real estate we could look at and only so much you could absorb. And then once those names rotate through and get better setups, we'll star them. It'll be in my focus list, at the bottom of the page, and then you'll probably see me long on my disclosures. One question from you guys was NVIDIA. NVIDIA is acting better. Some of you guys from Redler All Access are in NVIDIA still from this little red dog reversal here. Why was this a good entry? Because look where it came from, all the way into here, went below 150, came back above it. there was your day and a half move, which sometimes we only take. That's the move that I took. I didn't stay with it. And then triggered again, and now look at this. Cleared a pivot, closed near the highs of the day with the market not so strong above the 8-day moving average. And NVIDIA's been acting better since that. Here's your put it back on the radar, nice little trade, digestion higher, and boom. Okay, so earnings are until the 8th, and it still has some room here if it wants it. But as it goes up, it gets a little bit more difficult. But that's how you manufacture your game plan. That's how you use a tier system. That's how you massage your go-to list, and then also create the different lists within your go-to list for the best A, B, or C setup. So anyway, at this point, tomorrow's Thursday. We have Amazon after the close. If you played Facebook and you bought it above that pivot, congratulations. If you're in it with options, I don't know. We'll see what happens with the conference call to see if you get paid. Not much, big premiums there. Apple, what a move. At this point, we'll see if there's good strategies moving forward. We've had a lot of them. It's in my note every day, so I come up with some kind of tactical cash flow trades for you. Some of you have just been sitting in it. If you're sitting in it, you're better than probably trading it, but everyone's different. And then as far as the market's concerned, that hairline fracture in the S&P, which we call the hairline fracture in the momentum bull, has been resting. It's resting on that accelerated trend line. As long as it rests on there, maybe it gets some strength, builds some confidence to get going again. But the longer it stays here without, starting to snort the bull horns or do whatever, the more prone it is to maybe breaking that, and then that hairline fracture turns into a bigger break. But for now, we're still, in opportunistic mode. We're just a little bit more careful. Have a great night. I'll see you tomorrow.